Hello and welcome to the trade setup. In this video we are looking at energy fuels. It is time for another update, and on this chart we have been tracking this idea of a 1-2 setup where right now we would be looking for a third wave to unfold to the upside. Now for this to be a reliable wave 3 where we would be able to look for a correction in a wave 4 and continuation in a follow-up fifth wave to the upside, we would need to achieve certain expectations. We would need it to fulfill some requirements, and firstly it would need to reach the ideal target for the wave 3, which is the 138.2% extension of the wave 1 around the $130 level in the case of this structure. Now, since we have already built the wave 1, 2 and 3, we only have a fifth wave left before a more substantial top could be considered to already be in place. And it's not to say that a fifth wave could not get such a strong extension, especially within a larger wave 3, or that this overall pattern couldn't get an extension that would allow it to be a series of 1-2 setups within this area, yeah, and then we would follow up with an internal wave 3 and we would get quite a nice extension that way, but those aren't necessarily the most likely structures. We need to be prepared for something less bullish, because this does have quite the implications, especially since we might be looking at a full count within this structure sooner rather than later. Now, of course, a full count doesn't mean the end of an uptrend. We would still need to break relevant levels of support that could allow internal extensions, but a full count does represent the possibility of a completely different pattern playing out on this chart and potentially heading into much bigger retracements. So we could be looking at a 1-2 setup to form within this area. Yeah, this could form a fifth wave part of an internal wave 1 part of the large wave 3 to the upside. Overall, quite a bullish structure. Yeah, we would be looking to far exceed the overall expectations for this wave 3 if that were to be the case. But at the same time, we could be looking at a simpler A, B, C pattern in this area, in which case we may form a more substantial top within a corrective pattern, which would imply an even larger correction than what we would expect within an internal 1-2 setup within this area. In either case, there is substantial risk that a large correction would occur sooner within this structure, and the ideal target for the wave C is in fact here at the 100% extension of a wave A. That seems much more realistic for this wave 5. Now, this does not mean in any way, in any capacity, that it must get there for it to be a valid wave C, and that otherwise it will be a wave 1, yeah? So we are certainly within a high risk area, and that is why I want to highlight the silver lining on this chart. Because while in many of these structures we could be looking at a quite substantial correction once we form a 5-wave pattern within this area, within this fifth wave, within all of them, we would be looking still for continuation to higher prices, at least momentarily, at least until we have the 5-wave pattern within this area complete. Now, any of you who would have followed this channel would already be in great profits, because we have provided this area of support. This was our accumulation area, the levels between the $17.6 all the way down to the $10.7, and we have provided this area when we topped within this wave 3. This was our moment when we were able to look for a 3-wave correction into this area of support before the reversal to the upside. And while it has developed nicely, so far we do not have a full pattern within this fifth wave in green, and we are still looking for this wave to the upside to extend. And before we go into the smaller time frame, I wanted to briefly mention our channel newsletter. The link for that is in the description, and you get access to our monthly top picks, where we identify for you the high quality structures, the high quality charts that have patterns that are actually worth watching, and you can follow them along with us on YouTube, and it is completely free. But if you enjoy the content and you want to support us, you can check out our channel membership. The link for that is in the description as well, or you can click the join button and you will get access to some cool perks, including additional content. Now, if you want the full details, you can check out our channel update video. It's on the channel page, or you can access it by clicking the join button. Now, back to the chart. Here, within this structure, previously we have been tracking a more ideal structure that would occur within an impulse here in this fifth wave. Now, keep in mind, this is not a wave 3 that we are looking for here. It's a fifth wave, meaning that it doesn't need to form an impulse. It only needs to form a 5-wave pattern, whether that is even within a diagonal structure. So, in this idea of an impulse, we have identified very nicely an internal one to set up within this area. This is the most important portion of the uptrend anyway, this internal wave 3 to the upside, and we have identified this very nicely. We actually even had an internal area of support for this wave 2 that we highlighted as very interesting, and we were looking for a wave 3 to unfold from this spot. Now, the issue comes with what came after the wave 3 itself, because we did form it extremely nicely. We got far beyond what we required of a wave 3 in terms of an extension within this area. We had the ideal target at the $18 level, and of course we continued to track extensions as long as we were pushing higher. But since we have now formed the top within the wave 3 and we had our wave 4 correction, we already had it broken briefly in the previous video. Now, this wasn't a sustained break, so it wasn't something that wouldn't have allowed us to look for continuation to higher prices, but it needed to really not see another low within this area. And even though, once again, it's not a very sustained break, it's not really inspiring confidence either, and I do kind of have to shift to a different structure probably. I have my doubts right now of this idea of an impulse to still work out within this fifth wave in green, where I might prefer to look for an ending diagonal instead. So in the previous video, we had some resistance levels we were tracking. We had up to the $25.8 room to extend within a correction in this area that would have allowed us to still look for lower prices before seeing a breakout. We would have needed to get through the 78.6% retracement at the $25.8 for a stronger signal that a more substantial bottom would be in place. This did not happen. We have pushed into the 50% retracement, and we actually even identified here within a very small time frame a potential initial 5-wave move to the upside within a wave 1. We were hopeful, we had an area of support, there were some attempts, there were some reactions to these Fibonacci retracement levels, but none of them actually managed to ultimately hold, and even though there was the attempt, it ultimately failed, and we are now looking either at the reset theoretically within this wave 4, but what I find more likely, probably a failure of the idea of an impulse. So even if we were to start the fifth wave to the upside from this area, yeah, we can even remove the internal structure right now, but even if we were to start a fifth wave to the upside from this area, I would have my reservations in terms of considering this a high likelihood interpretation any longer. So what I would be watching out for is instead to build a diagonal structure, which is going to be our focus momentarily, where, yeah, we would be looking still for continuation to higher prices. I would still not consider this fifth wave to have a full count in the green structure, but I would really only require to form an A, B, C pattern within a last fifth wave to the upside before we form a more substantial top. Now, this doesn't mean we cannot be getting other extensions. Even this wave 3 in such an interpretation could theoretically still extend to higher prices here in an A, B, C pattern, but I wouldn't necessarily trust this blindly. Now, we can notice that within this extension to lower prices, we have actually pushed perfectly into the 50% retracement for our yellow area of support, and I already provided this area of support to you in the previous videos, because we wanted to highlight the last level that we can reliably track for continuation to higher prices. That was the $17.7. It still stands. We are still looking for that to be our last reliable level of support. And honestly, this is not an issue because we have just formed a nice reaction to the upside from our 50% retracement. Now, we can already start looking for the reversal in a fifth wave within this area, but I have no evidence at this point that this is indeed a bottom that we formed in this push to the downside. So, firstly, we could be looking for a wave C to form from the top in our latest swing high here at the $23.9 level. If we are to consider the ideal target, it is far below the area of support we have available for this structure, but we don't need to reach this target. Yeah, the 100% extension of the wave A, but we do not need to reach this target. So I will be tracking a potential extension here in this internal orange structure, and we can shift this to orange. And within this wave C, I could see another low to form within this area very, very easily, in fact, where I would consider the internal structure here to have a 1, 2, 3, 4, and a 5. So I would be tracking an ending diagonal within this wave C, and within this structure, I would need to break the relevant area of resistance for a signal that a more substantial bottom would be in place. Now, we will also leave here this larger area of resistance on the chart because I cannot rule out the possibility of having an overshoot that has formed to the downside within this area and that this wave B would still be ongoing. So I would still appreciate to see a break above the last level of resistance. That would help me in identifying a more substantial bottom to be in place. But I will also be focusing on an internal level of resistance for a correction in a wave 4 within this area, and that would be at the 61.8% retracement, which is very, very close to our current pricing, our current levels at the $21.6 level. Now, if we manage to break it, I'm not saying it is a guarantee that we will manage to push out of this bottom into higher prices, even into the area of resistance, because this structure could extend in other ways. But this is probably my preferred interpretation to track continuation to lower prices, yeah? I could of course be looking even for an extension of this wave 3 to the downside in an A, B, C pattern in this area, but I honestly don't find this nearly as likely of a structure as this idea of an ending diagonal within this movement to the downside. So at this point, it actually seems quite promising that we will see a breakout. Yeah, the structure does look interesting, although momentarily we only have a 3-wave pattern in formation to the upside, and we could form a top still within this area of resistance in a wave C in this structure, okay? We also have some additional structural resistance very much in line with the 61.8% retracement here, and a bit above we have some additional structural resistance. So I would also keep an eye out for these levels, but then I would resume watching once we break them the previous area of resistance we had for this wave B in orange, because I believe it is still in play. I believe there is still a risk that this was just an overshoot and that this could still form an additional extension to lower prices. In the end, we always follow the evidence and we need to see a break of the 78.6% retracement for a more clear indication that a more substantial bottom would be in place. That would be my first signal. Honestly, within these structures, it is always difficult to identify a clear bottom by breaking a relevant area of resistance because overshoots do happen, yeah, especially within such complex corrections. And ideally, what we would identify would be an initial 5-wave move to the upside. That is why we have been focusing on here to have a potential bottom, because we did have an attempt to create an initial 5-wave move to the upside. We had the possibility to look for the reversal from these levels. But for now, these are the levels, this is the trade setup. I hope you enjoyed the video, and if you did, don't forget to subscribe and let me know what else you want me to cover, and I'll do my best to do that in the days and weeks ahead. And if you enjoyed the video, don't forget to also leave a like, it helps us out a lot, and I hope you have a wonderful day, and I hope to see you in the next video. Bye bye.